Timeism, a corny view of inflation. If you put your money in a piggy bank and it loses half its value, is this not inflationary cheapening of your money? If you put your money in stocks and you lose half its value, is this not inflationary cheapening of your money? It is not the numbers on paper that count, but how many hours of work time, the true substance of wealth, you can buy with your symbolic numbers, whether it is money in a piggy bank or money in stocks. Anyone who wonders why AOL Time Warner stock has dived need only look at the money that Steve Case took from AOL Time Warner stock buyers. And he was not alone at AOL, for all the executives and directors had stock options. And AOL was only one of thousands of corporations that use stock options to enrich executives while employees' futures disappear. Inflationary cheapening of corporate symbols is what happens when corporate executives and directors give themselves the keys to the stock certificate printing presses in the form of stock options. Stock options have killed the substance of time that millions of workers saved in corporate symbols of ownership. Each stock option stabbed and killed the retirement of millions. When corporations announce that they have restructured executive stock options, they mean they are going to let the execs counterfeit more stock certificates for personal gain. This is like dealers lowering the price on drugs for parents to sell to their charges. The ratio of substance of ownership, physical assets, suffers inflation when the executives increase in symbols of ownership, stocks. While the Federal Reserve does not track inflation of this stock cheapening through stocks, it does consider stocks a form of money. IPOs have a math that should have stopped many buyers. Only 10% to 15% of a stock is issued on the initial public offering day, often at prices many times the substance of the company's value. Even if one buys at the lowest IPO value, the symbolic value has to drop by 85 to 90%, as the other 85 to 90% are sold into the market in the coming months and years. 401k plans are a form of monflation, that is, more symbols chasing the same substance of production. The math is simple. People who have automatic monthly 401k purchase of stock are the people who put money into the pockets of executives and directors exercising endless stock options. Contrary to the Republican mantra of rich people creating jobs, these people don't put money into production, jobs, or retirement. They hire paper pushers to manipulate symbols of wealth. 401k participants are like the parent who gives kids money to go to the mall instead of having the kids do their homework. As the greedy excesses of the 1990s show, executives with too much money don't have time for corporate management as they do the double BM, build mansions and ball mistresses, many of them teenagers. 401k participants are like people who buy last week's lottery tickets. Anyone who thinks they are investing for the long term by buying old lottery tickets or executive stock options would be better off buying the bridge in Brooklyn. Ironically, the stock certificate array does not look all that different from lottery glitz. If the lottery is a tax on the poor who don't know math, the NASDAQ was a tax on the middle class who didn't know math. A lot of people would be better off if they had invested in lottery tickets. Both IPOs and 401ks dilute the value of a shareholder's symbols of ownership, like the farmer facing monflation. 401ks are in too many ways a preview of the privatization of Social Security. In both, workers make monthly contributions with promised tax-free payments. In both, politically favored recipients extract money, the welfared from Social Security and the wealth-fared from 401ks. In both, the average number of workers supporting retirees is shrinking. In both, the promise of security has vanished. Monthly purchases of 401k stocks is a privatization of this public foolishness. Any questions about the benefits of privatization of Social Security can be answered by looking at 401k plans. If you put more money into Social Security today, do you think you will have more money when you retire? If you put more money into your 401k today, do you think you will have more money when you retire? Do you know anyone who asked their boss to take out more money each month for Social Security? But we all know people who keep asking their bosses to put money into the stock market. The difference between an IPO and a 401k is the difference between a flood and a Chinese water torture. Both eventually drown you in too much liquidity. 401k participants are like the thirsty person who keeps paying someone to put salt in their glass of water. If you lost your retirement to the Wall Street lies, you should know where it is, how they screwed you, and who did it. If you continue to put money into a 401k, you are having unprotected sex with cheap streetwalkers who will steal your wallet. Corporate leaders have a bad case of financial elephantiasis. Sinflation, shortage inflation, can come from Mother Nature or human nature. An environmental drought can cause a decrease in hydroelectric generation so that a power company has to raise per unit price to cover cost. An ethical drought can cause a decrease in electricity as greedy, deregulated monopolists withhold power from markets, or worse, withhold equipment repairs so that they make more money by providing less electricity. In the energy field, oil companies have been destroying storage facilities. This eliminates refining heating oil during the summer and gasoline in the winter, so that during peak demand there are shortages and a bigger spread between cost and charge. It doesn't cost any more to refine oil during low or high demand, but you can make more if you don't refine during slow times because you don't have storage facilities. This is a less obvious but a consistent source of higher prices. The result is consistent shortages, which require bidding of prices to higher levels. Sinflation, a contrived shortage inflation. Sinflation can be found in the great corporate achievements of Jack Welch in General Electric and in the Sage of Omaha, Warren Buffett. Consistently in corporate mergers and acquisition, one finds that needed, low-profit operations were closed down, which caused higher prices. Welch had a 5 to 7% cutoff point. Think about this form of sinflation. A profitable company employing Americans is closed down so other operations can have higher profit margins. Total American profits and productivity is down. Symbol productivity per remaining worker goes up, while substance productivity per capita goes down. It's like a wrestler wanting to increase his average arm strength by cutting off one arm. And Jack Welch, of course, did the corporate executive double BM, built mansions and bald mistresses. Even more disgusting is how corporate acquisitions were purchased by canceling retirement benefits, which is like selling your house without intending to pay off the first mortgage. Shortage inflation, sinflation, can occur if intelligence and motivation is drained to non-essential activities from needed goods and services. The stock market fable of the 1990s caused many students and workers to quit the fields of education, healthcare, and safety for the big quick dollars of Wall Street. Main Street lost substance to symbols with inflation plaguing public budgets from a death of brains. America is very much like the bushel of corn. America consists of the creators of substance and the manipulators of symbols. The symbols indicate ownership of America, that is, ownership of its food, health care, housing, and retirement. In 1980, the wealthiest 1% of Americans owned 20% of America's wealth. Top. In 2000, the wealthiest 1% of Americans owned 40% of America's wealth. Middle. In 2004, the wealthiest 1% of Americans will have 50% of America's wealth. Bottom. Did they get this ownership by creating substance or manipulating symbols? Who is responsible for this? In 1980, the Reagan administration legalized IRAs. The first Bush administration initiated the replacement of traditional defined pensions with 401k contribution plans. The business, economic, tax, and military actions of Bush Jr. have accelerated the transfer of wealth from the creators to the paper players. Ending estate taxes, which only 1% of Americans paid, means that the other 99% will have to make up the lost taxes. Ending dividend taxes will increase taxes for the creators. If corporations don't want to pay a fair share, don't incorporate. Few know the literal Latin origin of the word Republican, but it surely does fit. Res pubes, that is, rich pube. Historically, when 1% of a country's population owns more than 50% of its wealth, chaos and collapse occur. Stay tuned.